Hello Inderes TV listeners and viewers. Anora reported their Q4 this morning, and we have here from the interview the CEO Jacek Pastuszka and CFO Stein Eriksen. Welcome.
Thank you.
Thank you.
Yeah. So let's start with the Q4. You ended up improving a bit from last year and towards the high end of the full year guidance. So it looks like a decent quarter. What were the key points in your view?
Yes, I agree with this. I believe it was a decent quarter. We are quite satisfied with our performance in Q4. For me, the most important message is that we are back on track of the agenda that we have established, and we talked about it in one of our meetings that we established at the end of 23. Yes. At that time, we said that we need to really focus on the marginality of our beverage business, especially after a period in which our pricing did not reflect the inflation in the COGS. And the second thing we have said that we need to pay an even closer attention to the overall financial health of the company, as measured by debt, leverage, trade working capital, balance sheet, you name it. Yes? So these were the two big building blocks. And I think in the first half of the year, for the first two quarters, they were also decent in terms of the commercial performance, but most importantly, we were delivering on these two things. Yes? Our marginality was improving very nicely, and also we were gradually taking under better control the non-P&L elements of our financial performance. Q3 was a bit of distortion. Yes. It was a disappointing quarter for various reasons. In Q4, I think we are back on this track or this trajectory that we have established in the first half of the year, with visible improvement on marginality, continued, sustainable, I want to believe, improvement on marginality, and then all the financial elements that we will be talking about, I'm sure, later, also improving steadily and visibly. The new element that emerged as we progressed in the year was the need to spend even more time and money also on tightening up as well some of the loose ends that were still in our operations and are to some extent still in our operations following the integration of the Globus wine acquisition and also even merger of the companies 3 years ago. There are still some loose ends here. There were still some loose ends, and some of them are influencing, and it was very visible in Q3, our financial performance. And the fourth element we start seeing from Q4, and I'm happy to see that we have space for it in our P&L, and we are still delivering on the communicated expectations, although revised, admittedly, that we are finding space for marketing investment, because as we also talked in these meetings, our top line performance has been a headache. Yes, it was weak. Yes. As I said earlier today, we sometimes forget that a good 2/3, if not 70% of this decline in net revenue is coming from elements that have nothing to do with the base beverage businesses on our brands. But still, it's a significant reduction. 5% reduction in net revenue is not a small thing for the full year. So for us, reversing this trend, or at least bringing it closer to our expectations and plans, is an important thing. So we start investing behind our brands, especially the brands that on the spirit side of the business where the profitability is higher, and especially for the international markets. So I expect that especially in the first half of the year, we should some improvement in the international markets.
Yeah, good. Okay. The wine segment was, I think, particularly strong, at least compared to my and the analyst expectations. So can you talk about a bit more what was happening there? The gross margin improved quite a bit, and you handled costs quite well as well.
Yeah, wine has a good year. We fixed the base, so to speak, yes, because our base was extremely low, so we need to keep it in mind that we were really troubled big time. So there was an expectation that we should have this type of growth, and luckily the team has delivered a very significant growth for the full year. Q4 was good. Q4 is always very much dependent for wine, obviously, on Gluck, on Blossa, which is included in the wine numbers. So for us, managing well the Blossa season is absolutely critical. We were not particularly helped by the weather this time because the winter conditions, they were not there. And for Blossa sales, you need a bit of this Christmas vibe, yes, and a bit of snow for consumers to get in the blossom mood. But still, we were able to deliver good enough numbers for the wine segment to shine for the fourth quarter, and as a result of that, for the full year. But looking at the full year, I think the key elements that drive wine is a combination of different factors. It's never one factor. Sure. First of all, we have taken pricing, which we should have taken, and some of our brands survived it well. Secondly, we have a bit more stability, if not even a slightly positive trend, on the gain-loss on the partner business. As I talked also about it earlier, there is obviously fluctuation in the partner base, and there are periods where you're on the negative side, like we were with wine in 23, but sometimes you have a bit of positive momentum. We have delivered good numbers for some of our largest partners, and they appreciate it. And we also increasing some of the mid-sized partners that are joining us, and also our pipeline is quite healthy. So the partner business was in good shape. Then we didn't have any currency issues anymore because of the hedging that this time we have taken care of properly. We have stable COGS, despite a bit of inflation. Obviously, general inflation. I think our efforts on the procurement for wine sourcing delivered pretty good COGS, and this is where we gain some benefits from a bigger base for wine sourcing when we have Globus wine. So there are some benefits from Globus wine, for sure. And then they also manage the OPEX base well. We have reduced headcount a bit at the beginning of the year to manage the personnel cost, and it's visible in the P&L. And also they have managed the marketing spend very closely, yes. So the combination of all these elements delivered a good quarter, and as a result of that, a good year. We are happy with wine in 24.
Yeah, exactly, right. Maybe Stein, if you take the next one, still staying on the wine business, the Danish business, Globus Wine, has been basically more or less a kind of weak performer throughout the years. It has been a part of Anora, so you highlighted some issues also in the second half of last year. So can you describe a bit how is that performing now, earnings-wise or otherwise, and what's maybe the situation there now?
I think it's twofold. Like if you see from a financial perspective, it's we're still having challenges, I would say, in the Globus, and also, as you could see, we booked 2 million as a IAC related to what should we say, old stuff in Globus. So, but I believe now that we have cleaned up in the balance sheet of Globus Wine. But I think, so that's from a commercial, from a financial perspective, we still have a way to go in improving the profitability of the company. But that being said, Jacek also mentioned it in the call, we have gained quite significant market share in the Danish market. We have improved almost 280 basis points in the market share performance. So the foundation to start to get a profitable business also in Denmark, I definitely believe is there. But it's still a turnaround case, I would say.
Yes. Okay. Going towards the better.
Yes. Yes.
And what about you have the insurance claim there on the acquisition? I guess no news on that. Do you have any visibility on that?
No, we have been in dialogue with our insurer in London. We got some more questions, I believe, in November that we have answered out. So, but we're still waiting for a final conclusion.
Okay.
Yes.
Let's stay in progress. Okay.
Yeah.
Okay. Then for Jacek, one question actually from our investor forum regarding the strategy a bit. So the question was about that. Have you considered kind of emphasizing more the spirits, and even especially the own production and less wine? I think the background being that obviously the own production is much more profitable than the wine business you make in general. Yes. So
No, in terms of strategy, I need to refer all of us to what we have communicated in November 22. Yes. I recognize that we are far away from the financial targets that we have communicated there, and I want to think that 24 was a transition year to improve our chances to start getting in this direction. But in terms of the commercial choices and overall business choices, it's all there. One of the statements that was made in November 22 in this presentation was that we want to increase the share of margin accretive businesses, yes? Which then addresses a little bit, because for anybody who understands the composition of our business, you know that the spirits own brands, this is obviously the highest. So naturally, if we want to think about improving the financial performance of the company, increasing the share of this part of the business is a natural solution, and we know it and we are working towards it. However, and it's a big however, what we overlook is that almost half of our net revenue is coming from wine. And within wine, big portion of wine is partner business. We have own brands and they are doing well, but even own wine brands, because of the nature of pricing on the wine side, their marginality is lower than the marginality of our spirits business. So to look at the composition of our business, we actually have 4 buckets. Yes? And we have own spirits brands, we have own wine brands, we have partner spirits, we have partner wine. And the P&L profile, and as a result of that, the gross margins and all the key indicators are very different between them. And I mean very different. The range on gross margin is between like 75 and 15. Yes? So this is the area in which we operating. And we cannot drop any of these balls, because if we drop any of these balls, then obviously our total performance will suffer. So all of these 4 buckets are important in their own terms. And I believe there is as much potential in improving the mix towards own spirits brand as there is in improving profitability of our large partners. Yes? So I think these things are not mutually exclusive. We cannot just drop the partner business and run after profitable high margin spirits, because the composition of our business and the composition of our P&L just do not allow us to do it.
That makes sense. Then maybe Stein again on the dividend and perhaps balance sheet as well, regarding that you are proposing to maintain the same dividend you have had now for 2 years. The balance sheet is not definitely on the strong side, but should we take this as a kind of comment or indication that you are fairly comfortable with the balance sheet at least?
I mean, now it's not the administration that proposed the dividend, that's the board of directors, and it has to be approved by the AGM. But that being said, just to give you some flavor, I also said in the call I was very happy with the cash flow in Q4. So we ended, I agree with you, it's not a strong balance sheet, but it's stronger than what we expected internally and what you expected. Also, we still have a lot of potential when it comes to working capital. I think both looking to reduce inventory and also increase payable, a big opportunity there. And then also we need to also use the sales or receivable program, I would say, wisely going forward. So definitely we will continue to work to get the working capital even better than what we have today. But to answer your question short, no, I'm not worried going forward. No, with that dividend. No. Yes,
very clear. Then finally on the outlook, you're guiding 70 to 75 million in adjusted EBITDA, and you commented that you're expecting a fairly stable market in volume terms. And I wanted to ask on that, since the market has been declining overall, and we have seen Finland and Norway clearly on the negative trend in the second half of last year. So are you expecting it kind of to stabilize already now from the beginning of the year? Or
we need to, yes.
It will be,
what are the choices to
go up towards the second half?
No, the real answer, Rauli, to this is that it's very uncertain. It's a very volatile, uncertain, unclear situation right now. We had these big fluctuations recently versus our original expectations. We have entered the year with, we thought, quite sober and modest expectations. Things got much worse. Yes. September was very bad. Then we are quite dependent on the Finnish market, and this market was in big turmoil because of the grocery, wine and grocery. So the situation is quite unpredictable. I hope, as I said also in the call, I hope we are quite sober about it. But on the other hand, we need to be on the optimistic side, yes, that the market will stabilize and that we will see some improvement over time, and that we will be able to beat the market and grow shares in the places where we are not doing it. Because if we are not optimistic about it, and and our team is not working towards delivering this, who will? Yes? So yes, I understand that our market outlook may seem to be on the slightly optimistic or positive side, and we are aware of that, and we are also preparing contingencies to act in case it was not what will actually happen.
Yeah.
And also, sorry if I can just comment briefly, if you look in Q4, you saw that the Swedish market started to recover, both in volume and in value.
Yes.
Norway started to recover in value, not in volume, and while Jacek already mentioned, Finland is a more challenge, also if you include grocery.
Yes.
So
and then you have market share performance on top of this.
Yes.
Because, for example, in Finland we struggle, the market struggles, but we are happy with our share performance. In this very difficult market. We have very robust, even improving share on spirits, for example. So it's a combination of these two factors, obviously.
Yeah, that's very clear. Okay, thank you, gentlemen, and all the best for the year.
Thank you very much.
Thank you.